Other one, very different business, but also a very nuanced ability from a pricing standpoint. We own TJX Companies. TJX is an off-price retailer. And so TJX, they own TJ Maxx, they own Marshalls, they own Home Goods. And their business model is essentially based on taking advantage of kind of the perpetual inefficiencies in retail supply chains, apparel and other types of retail supply chains, where there's overproduction, there's missed orders, there's things that happen. And this is just because there's such a lag, about an 18-month lag for a traditional retailer between order and delivery, things happen. And it's just the nature of the business. And so what TJX tries to do is they buy late in the cycle, and they buy at a price where they can sell at a price where they're going to have a big discount relative to traditional retailers. And what's important for them is just to maintain that gap. So whether or not if they pay $10 for something and they can sell it for $20, well, that's great. But if they have to pay $15 or something, then they can just sell for $25, assuming that the traditional retailers are doing the same thing, which the economics would suggest they normally will. So again, another company with, I would say, kind of a very nuanced ability to pass price, where they're still actually, there's a very good argument they're providing value.
I'll say they are. I mean, I don't like to shop. In fact, I hate it. But a couple of times a year, I will go into a Marshalls or a TJ Maxx. And I was just there maybe a month or so ago, Marshalls. And so that's why this is fresh. And they have this discount shelf at the center of the store. And you go there and there's stuff that is available literally for pennies on the dollar, like staples and other things. It's really amazing. So as a value shopper, it's a pretty good deal, especially with prices going up everywhere else.
Yeah, the thing with TJX that's interesting is they are very much still a brick and mortar retailer. They get about 1% of their sales from an e-commerce standpoint. And the reason I bring this up, it's related to your point, is they're trying to create this treasure hunt experience. So what they're trying to do is they're trying to flow merchandise in and out of their stores very quickly. So if you look at their inventory turns, they're much higher than an average retailer is. And they're trying to use their buying and their merchandising to get merchandise in there that they can buy and they can sell quickly. And the other thing, they're very aggressive. If things are not selling, they will quickly mark them down, because the way that business model works is to maintain freshness. And what's interesting about that is we've seen this big change in retail where e-commerce has really disrupted a lot of retailers. And TJX is the one that we haven't really seen that yet. In fact, if you look at their numbers, and they've been distorted because they've been mandated to close stores, certainly in the US kind of back in 2020, but even last year in Europe and Australia, they're global. It's hard to get that like for like those same store sales, but they're reporting it in a way you can't see it. And there's pretty good evidence that model is still resonating with consumers.